when we learned the chapter 1 way of doing stuff, let's analyze a transaction and let's do the chapter 1 way of doing it, okay? Let's say we buy office supplies for $250 cash. Are you with me? Okay, well, how would we record that? This is the chapter 1 way. Okay, well, we would say cash goes down by 250, right? So minus 250. And office supplies goes up by 250. Is that correct? All right. And then what we learned on lecture 6 last time was we started talking about the concept of debits and credits, right? And I asked you, okay, with your knowledge of debits and credits, how would you make cash decrease? It's kind of like Quick Study 2.5, okay? How do you make cash decrease? Well, it's a normal debit balance account, so it increases with a debit and it decreases with a credit. How do you make office supplies increase? What do? Debit it, okay? So what we learned on the last lecture was, back up here a little bit, is we had a T account for each of these accounts. This one is for cash. This one is for office supplies, correct? And I'm not always going to write this, but the left side of a T account is the debit side. The right side is the credit side. Okay, I'm not going to always write debit and credit on every T account. The left side's always the debit, the right side's always the credit. Okay, but we talked about how you would show that by putting 250 here for cash, right? And when I wrote that there, that is called crediting cash for 250, right? And you would put a 250 on the debit side of office supplies. That's called debiting office supplies for 250. Am I right? Okay. And remember, there's never any pluses or minus signs in these T accounts. Never, ever. Okay. Do you remember that? Everybody good? Okay. Now, I want you to understand that there is actually a step in between these two steps. Okay? And that's what we're going to talk about today. That step is called making the journal entry. Or sometimes we say making the JE. Are you with me? Okay. Now let me go ahead and write this down and then we're going to talk about it. Okay? I'll write down this transaction as a journal entry. Okay. This is called making the journal entry. Have you ever heard of making journal entries in accounting, guys? That's what I'm teaching you now. This probably goes, didn't one of you have accounting before? Was that you? This probably goes to what you remember, right? This is a way, this journal entry is a way of saying, we need to go to the office supplies T account and debit it for $250, like we did here. And then we need to go to the cash T account and credit it for $250, which we did here. Okay? Now, this is called making the journal entry, and it tells us what to do down here. This is actually called posting to the T account, or sometimes we call it the ledger or the general ledger. Okay? All right? This is called making the journal entry, and it tells us, it's the instructions to do this. Are you with me? Now, you really need to understand this. When I ask you to make journal entries, it's going to look like this. It's not going to look like that. This is not what you see on the screen. That is not making a journal entry. This is making the journal entry. This is posting it to the T account or to the ledger. Okay? Now let me say some things about making journal entries. You list the accounts that are being debited first, and then you list the accounts that are being credited. Now notice what I did not say. I did not say you list debit balance accounts first and then credit balance accounts. Because these are both debit balance accounts, are they not? You list the accounts being debited first, and here there was only one. And then you list the account or accounts being credited next. Okay? Now the total of the debits and the total of the credits always has to equal. Now in this instance, there's only one account being debited and one account being credited. So it's pretty easy to see that they are equal. 250, 250. Are you with me? But sometimes there'll be two accounts being debited or two accounts being credited. Okay? The total in the debit column always has to equal the total in the credit column. Are you with me? Okay?
When you say you have to put all your debits first and then your credits, let's say you had some accounts that were credit accounts, do you put those in between, or you do all your debits first and then credits?
Okay, let me specify that. And when we do the in-class exercise, it will really clarify that. But a couple things that I think maybe I heard in there. If we're analyzing 5 transactions, 5 different transactions, you analyze each one with a separate journal entry. Okay? You don't do one big old journal entry. Okay? It's each one separately. So that's a great question. But you list the accounts in each journal entry, the account being debited, the account or accounts being debited first, and then the accounts being credited. Okay? Now, notice here, this is the way I want you to do journal entries. Accounts being debited first, accounts being credited next. And did you see how I indented the accounts or accounts being credited? That's the way I want you to do this. Okay? I'm going to show you some incorrect ways that I've seen people do this journal entry right here. Okay? These are incorrect ways. This is the most common incorrect way. No. You see why that's wrong? You list the accounts being debited first and then the accounts being credited. So that's wrong. Okay? Here's another way that I've seen students do this wrong. Okay, what's wrong there? We didn't indent the accounts being credited. So that's wrong too. Okay? Here's another way I've seen, and this one's a wacky way. I have to even think through it. I don't know what's going on there, right? Okay? The correct way to do this is you list the accounts being debited first and then the accounts being credited next. And the total in the debit column has to equal the total in the credit column. You with me? Let me hop over to the computer real quick. I think there's a slide on a journal entry. Okay? This maybe shows it in a different way. Now, I did not have a date for this journal entry, but there's 2 journal entries shown here. Okay? Make sure you list the date of each one over here to the left, okay? Now, this goes kind of to what your question is, Whitney. These are 2 separate journal entries, okay? Don't combine these into one journal entry, okay? But you have the accounts, the transaction date, the title of the affected accounts there. Now, you have the dollar amounts. Now, don't put dollar signs. Don't put dollar signs, and by golly, don't put pluses or minuses in your journal entries. Never, 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 never. Okay? No dollar signs, no pluses or minuses. And then they usually do this explanation for each transaction. I don't really make you do those, but sometimes they'll do those in the book or in the homework, but I don't make you write that. So these two journal entries, the December one is saying you need to go to the cash T account and debit it for $30,000. And then you need to go to the capital account for C. Taylor and credit it for $30,000. Next transaction, you need to go to the supplies T account and debit it for $2,500. Then you need to go to the cash and credit it for $2,500. Are you with me? Okay. All right, one more time. I'm really going to emphasize this. This is making the journal entry. This is posting to the T account or to the ledger. When I ask, and I always ask on a test for you to make about 8 or 9 journal entries. I want to see things that look like this. Please don't have me look and see a bunch of T accounts. That's not making a journal entry, okay? This comes before this, and this is the instructions to do this. So what we're going to do here in class today in a minute is we are going to analyze a transaction. Like let's say we go get a $5,000 loan from the bank. You with me? Okay. Well, how would the chapter 1 way be? Well, we would say cash plus $5,000, and then we would say notes payable plus $5,000, right? Now, I'm going to want you to make the journal entry. Now, sometimes students struggle with this, so I'm going to tell you, here's the way you should think through it. Do it the chapter 1 way first. And then ask yourself, just like this was quick study 2-5, how do you increase cash? What do you do? How do you increase cash? You debit it. How do you increase notes payable? How do you increase notes payable? You credit it. Okay, then you do your journal entry. And you list the accounts being debited first, and then the account or accounts being credited next. Okay? There is the journal entry. So this right here, that is the chapter 2 and beyond method. This was the chapter 1 method. So I'm going to ask you to make journal entries, but folks, if you are having trouble, don't shortcut it. Just do it the chapter 1 way, then ask yourself, how do you affect that change in those accounts? And you see how that guides you into making this journal entry? You see that? Okay?